3 option terms for beginners is what this video is about, ladies and gentlemen. Let me be clear. There is definitely more than 3 option terms you'll need to know. But these are 3, in my opinion, you should learn in the beginning. In fact, there's going to be a video popping up right here. Get ready for it. Boom! There it is. This video is going to show you the unfair advantages of selling cash secured put options on stocks you'd be happy to own. I put it at the 30-second mark, so that way it's easy for you to remember. And I'm leaving the 1-minute mark open for another video that's going to pop up. Boom! Ready? There it is. So there's 2 videos for you to watch when this one is done. One at the 30 seconds, one at the 1 minute. And now let's get into looking at 3 different option terms you definitely need to know. The first term we're going to talk about is strike price. The second term we're going to talk about is expiration date. And the third term we're going to talk about is premium. So the strike price is the price at which something is going to happen. That something depends on if it's a put or if it's a call, and if you're buying or selling. All that type of stuff, that's for another video. So the first thing I want you to realize is that a strike price is the price that something is going to happen at. Right? It can either be if a stock, depending on what type of option you're doing, if the stock stays above the strike price, nothing happens. If the stock stays below the strike price, nothing happens. Depends on what type of option. That again is it's past 3 different terms, right? So strike price, that's something that when you're buying or selling options, you are going to have to pick a strike price. The second thing is expiration. This is an option chain for XLF, financial ETF. This is not suitable for you. It's not financial advice. I don't think you should trade XLF. That is exactly why I'm showing it to you. So there's no way possible that you would, this can be construed as a stock recommendation. I'm just using this as an example because I don't want to pay an attorney to walk me through, all the legalities of what I need to do to actually give you a little more detail. So we're just using this. It's a popular ETF, financial ETF, just using it for demonstration purposes. Whatever labels you want, whatever proper pronouns you want to put on this, then you go ahead and put that on there. But I'll tell you what, it's not. It is not financial advice. We're just looking at strike price here. So this is this strike price. Here's your call side. Here's your put side. Strike price is down the middle under this strike, right? So regardless of what side you look at, the strike price is relevant for either side. You just move over there. If you're buying or selling a put, something's going to happen at this strike price. If you're buying or selling a call, something's going to happen at this strike price. That thing that's going to happen depends on the option and if you're buying and selling. But there is the strike price, right? So that's something that you really have to be aware of. What is a strike price? Look at this. A strike price can be in the money or out of the money. See how this is blue over here, and this is blue over here, this is black over here, and black over here? Look at that. See how it's kitty corner from each other? So over on your put side, these strike prices are out of the money when they're in the black. Over on this call side, these strike prices are out of the money when they're in the black. So guess what? What's the opposite? In the money when they're in this, whatever color this is. In the money when they're in this color, whatever this is. All right, so throwing some extra terms at you, in the money, out of the money, and I apologize for that because it's only supposed to be 3 here, but that is something that comes up naturally when we talk about strike prices. So again, what's a strike price? It's a predetermined price that something is going to happen, and that something depends on if you're buying a put, if you're buying a call, if you're selling a call, selling a put, la-da-da-da. Expiration date, right? Expiration date. All options have expiration dates. They are, by nature of options, they have a limited lifespan. And just like human beings, by nature of human beings, we have a limited lifespan. Generally speaking, options are going to have a lifespan of, like this one goes out to 1,000 days. Okay, 940. And this one's gonna have the least life left, 2 days. Right. So depending on the underlying ticker symbol, underlying is a term for a different day, but depending on what stock you're trading the option on, will pretty much determine how long these expiration dates are. But these are the expiration date. You need to know the expiration date because if you're buying or selling, this has a big impact. It has a real big impact. And you want to be able to pick the appropriate expiration period for the type of strategy you're doing, and you might want to think about what's going on in your life. So expiration date, right? All options have an expiration date, and you want to pick the appropriate expiration date for your situation. Premium. Premium is the amount of money that you pay or receive. Why would you pay it? If you're buying the option, you're going to pay the premium for the option. If you're selling the option, you're going to receive the premium for selling the option. What do you call your car insurance monthly payment? Is it a car insurance premium? Is it a premium payment? Some people call it that. Same thing here in the option world. So premium is the amount of money that you are going to pay or receive to buy or sell. I'm assuming you can figure out the difference. If you buy it, you're paying. If you sell it, you're receiving. And that's the premium. So we got strike prices. What's a strike price? It's this predetermined price. It's a predetermined price that something is going to happen at. This is the price that is kind of like the line in the sand that says, hey, if you cross this line, something happens. That's the strike price. What is that something that's going to happen? That's going to depend on whether it's a put or whether it's a call, and if you bought it or if you sold it. Did you buy or did you sell the put? Did you buy or did you sell the call? So those variables will change, but we know we're going to have a strike price. We know we're going to have days till expiration, and we know there's going to be some premium paid. So those are 3 terms that every beginner needs to know. You have to know these things. Of course, you're going to need to know what a put option is, what a call option is. You're going to need to know, or it would benefit you to know, what delta is, what volume is, what open interest is. That would benefit you. You could buy and sell. You could definitely sell cash secured put options without knowing what open interest, what volume is, and what delta is. But you definitely have to know, in order to be selling cash secured put options on stocks you'd want to own, you have to know what a put option is. You have to know what happens when you sell it. You don't really have to know what happens when you buy it, but it would benefit you. You got to know what a strike price is. Got to know what your expiration date is. And you got to know what the premium is. With that, if you guys want more specific help, I got a free playlist here to get you up and running. You can use that in conjunction with these downloads. And I got paid stuff here. And I'll be upfront with you. It's not cheap. If you're a cheap person, don't even click this to check it out. It's not cheap. I don't want it to be cheap. Because I don't need you to pay this in order for me to fund my lifestyle. My lifestyle is already funded. I'm doing this for F-U-N. I'm doing it for fun. So I don't want to deal with stick in the muds. And so I got the price a little bit high because it's going to weed out some stick in the muds. So if you're not a stick in the mud, you're not a cheap person, you value your education, consider checking that out. Aloha.